The thing I want to focus on in this trade breakdown, where I made just under $10,000, is not exactly the trade case study itself. It's more so the details of liquidity. This trade, if you are focused on looking at smart money concepts and focused on looking at market structure, which are both great schools of thought and definitely things we utilize, but if you are using them in isolation, if you're using them out of context and incorrectly, you would have actually taken a loss. But if you use liquidity to complement your smart money concepts and market structure analysis, using those three in connection and conjunction would have made you realize this trade was completely different to if you just use market structure and smart money concepts. And in this video, I want to highlight how important it is to not be one-dimensional in the way you view the markets, but rather having a strategy that connects multiple schools of thought together, and then you have a hierarchy of confirmations to know when to deploy an entry. As always, in this trade, we use the daily cycle, we use liquidity, we use lower time frame confirmations, market structure, smart money concepts. We use a whole host of things, but the key is you don't use any of them in isolation, and you don't give preference to any one of them. None of them are magical concepts, but the power of these concepts and confirmations come when you combine them together as a group and a collective of confirmations, and that's what formulates trade models. So this trade is not a key prime setup. This is not the easiest trade to take, but it's the context of the way things were combined is what I really wanted to show in this video. So let's jump right in. Over here, we can see we have our TradeZeller performance of this exact trade. We can see that this trade netted just under $10,000. I took 30 lot trade. Okay, my return per pip was here. My commission was about this on closed position so far. I still have a runner. Gross P&L minus commissions therefore became my total profit with the gross profit over here. My stop loss original, as I mentioned, was at this high. You can see exactly the price I entered at where my stop loss was. And therefore my risk reward or realized risk reward was about a 1 to 10. But what happened was I took a partial at the 1 to 3 zone that you'll see. I took a partial over here and I took a partial over here. So on the screen, you can see the price action, and it's not too different to the price action of the last case study we did where we are printing lower highs and lower lows. And it's very simple to see that we are trending bearish. Now, the key becomes is knowing your main push and knowing if there's going to be any relevant reversal. So we look left and we see that we are in lows compared to the previous low, and we are entering this area. So I just need to mark this out to know, is this area of relevance that is going to affect my setup? So we go and look on our current price action and we see, okay, price has cleared a low. So when price has cleared a low, we know that a few things can happen because we made a lower low, but we don't know how low the lower low is supposed to be. So we need to therefore realize that we are not going to jump into buys and just catch the bottom. We need to have confirmations to see that market structure shift, because for all we know, just because it's made a lower low doesn't mean it can't keep going lower. We don't guess the bottom and we don't guess the top. We have to realize when it's starting to complete the lower low and now it's going to be doing the retracement. So for us to understand when a lower low is formed and the retracement is going to now happen, and we're going to get some relief to form that lower high, what we need to see is internal structure. So that internal structure is one thing we're going to be looking out for to frame our day, to know that are we now looking for a complex pullback up to a supply zone, or are we going to continue bearish and form a lower low? Right now, the higher time frame is not going to reveal that, but when we get into the lower time frame, that's one thing in my mind I need to have, is that we're not in a demand area, so I can't look for a buy, but all we know is that we are bearish, and we might be looking for buys or looking for sells depending on the context of intraday. So the only thing to therefore mark out is our main push is from the lower high to the lower low. That is our main push. And then we need to identify relevant supply areas within the main push that we could be reacting off, or looking for bullish signs to know the complex pullback. So for the complex pullback, where could be the destination? It would be here. It would be the high that made the low. So we mark it out as a supply zone. And we know that supply zone, that is the one that led to the low. And if I look over here on the left, it is actually very nice because it is doing mitigations of previous supply areas. So I know that we are following nice market structure where we are mitigating extremes. And we know that we have this order flow, which could be liquidity at some point. That is just something to note, but it's not a consideration for right now. But all I know is that we had lower high that made a lower low. Price came back to the extreme, mitigated a supply zone. The IFC that was left unmitigated, known as a banker block. And then that area led to a new lower low. Another important factor is the area that made the low and the break of structure. It was this same area. So right now we don't have multiple POIs from decisionals or supply to demand. We only have the extreme because the extreme is the one that led to the break of structure and took out all of this ascending trendline liquidity. So therefore we know this is a significant area. This area right here is not necessarily a strong supply zone because it didn't lead to a low. It didn't lead to a break of structure. The main push happened from here. So I need to therefore realize this area is a weak supply. This area is a weak supply. And anything else is a weak supply because it's not led to a break of structure or a change of character. And that is key definition to know what is a strong area. So right now, I know that this was an area that made a low. When a new low is made, what happens? Sellers get out of the market and buyers enter the market. So when we have that change of dynamics, sellers are taking profit, buyers are entering because it's a new low, new market structure situation. We know that buyers are getting in, but we can see that the buyers had their intentions. We'll look at this in detail in just a second, but this area has now confirmed it's a redistribution, where it could have been an accumulation where this low had happened, then we started to retrace. In fact, it failed and continued to make a low. So we know that this area was a redistribution. And over here, we need to see if there's anything relevant over here. So now we've done that framework. Let's jump into M15 and dig a little bit deeper, knowing the context of our main push. So I just now want to analyze these supply zones. So this supply zone over here, the extreme, is a very simple one. It's not too much to take in because it just tapped into the extreme and made a low. And all it did was basically, it didn't do any manipulations, didn't do any traps. It just tapped in and then left. The only kind of thing we can see is that when we came into the supply zone, there was an early reaction here, maybe premature sellers getting in, strong vector up, strong inducement high, and then price starting to collapse and go lower. So we know that there was a minor inducement here, but apart from that, not too much to take. This area, on the other hand, that after the low was made, what is price telling us? Price is showing us that we have made a low and then it's being supported. So we are getting this ascending trend line. Then we get an inducement to make a low. That inducement does lead to a break of structure. Okay, so we are now seeing some sort of confirmation, and then we are getting all of this liquidity building to support buyers. Price runs that liquidity, okay, and then comes into this level. So price is showing us, okay, everything is looking fine. But in the end, price comes here, makes a small reaction, and then fails and induces all of these people out. So to say that this was not a buyer's situation, even though there were certain signs, we have to read it from the other context, which is of the seller's context, to show why the sellers actually played out. So let's take a look, let's take a read of it from that framework. So from that framework, we can see that we had this high printed. Let's do it in red because it's sellers, and then we had this inducement. So now that we've had that inducement, we've made a supply zone. So that supply zone was made, and what happened? Price was respecting it, where we had this trendline liquidity, inducement, and taking out all of that liquidity, bearish push. So we had that bearish push down. This area became a smart money trap zone because we had a smart money reaction, smart money traders getting in, and then inducing them out. This became the inducement that led to a mitigation on the left. And that is a liquidity cycle because we had a build-up, inducement into supply, and that supply is a previous inducement area, it's a previous FU zone. And then we had all of this liquidity that price was magnetized towards, that it engineered and continued to engineer, but that inducement is the one that led to the break of all of that. Then we just read the finer details and we can see that price was being led by these inducements, where we had build up, inducement, and then push lower, okay? Then we had another build up, inducement, mitigation of that supply, and then pushing lower to take that liquidity. And then over here, we had once again inducement to allow this trend line area to be taken, or this small trend line that was going to be forming. Maybe people were looking to get in on the third touch. That inducement fueled the move down. So as you can see, my comparative analysis between the blue and red, you can see the red of the suppliers. We can see that is the correct framework, and it's very easy to see the opposite. So you have to be careful because they will show you signs for both bullish and bearish scenario. That is known as the devil's advocate. But the key is knowing who is in control, and to see who is in control, you have to really look at the details. And the details is not market structure. The details is not smart money concepts. The detail is not Waqar theory. The details is not trend lines. The details is not Fibonacci. The details is not any one thing. It's not even liquidity on its own. It's how you connect everything together and looking at the details of price action alone. Price action alone is going to show you where are the inducements, where's the intention, where's the liquidity being built up, and then when the liquidity is taken, how does structure react? Do we then get a follow through? Do we get large bearish candles? Then we combine all of this to build a story of price. And that's what we did. We just did a quick read of story to show that the sellers were in control. And therefore, that's why we had 1 inducement, 2 inducement, 3 inducement, 4 inducements, 5 inducements to confirm it was a redistribution. And then we took out all of the buyers that were framing and looking at the market with the wrong lens. They were looking at their bullish lens when they should have been looking at their bearish lens. And that's exactly where they went wrong. So we see that this continued on to be bearish. Now, the reason I mention this is because we are looking for supply zones when we are coming in. So we are correct in understanding this is a bearish area. And the only area left unmitigated would be following the inducements. So we have this area built up, inducement, reaction. So we know that that is a supply zone. So we look at it and say, okay, this is our supply zone. And we covered the imbalance. And then we can see right before that, we have another area, which is having an inducement where we had this build up and then this inducement right here. And that inducement tapped into the supply of the previous area. So we know that this area can be considered partially mitigated. And we don't know if price needs to come higher into this area and consume the above zone, or if that area is considered mitigated. That is impossible to know. Therefore, we factor it in. We look at M5 and the lower time frames to see if there's any areas of key interest that would need a mitigation directed by, let's say, large vectors, or looking at the lower time frame for sub or minor inducements within, or large imbalances for argument's sake. But for now, we can just say that this area is considered potentially mitigated, and therefore we look at the last area that is left unmitigated, this IFC zone. So these areas are where I'm going to be looking at my supply, okay? And we know that these areas are relevant because that is what led to this area being taken out of liquidity and forming the new low over here. So that's what I'm paying attention to. These areas I can mark out, but these are going to be my weak supply zones. So I'm going to take this area as a whole. I'm not going to pick preference of one over the other. And then the last area to look at would be this one, but we know that this is taken out, so that is not for today's analysis. But this is also going to have a similar read to how we did here. Now I just need to understand, when we come to current price action, we can see that price has had substructure. So we can see that we had this internal structure of the main push. Remember, the main push being from lower high to lower low. We do have our substructure, which is internal lower low, internal lower high, internal lower low, internal lower high, and then lower low. So we know that this substructure is important and relevant, and we just need to read that this was our interesting POI. Everything else is left unmitigated. This area could be a zone of consideration, but this is what I want to be careful of. I don't want to have 10 supply zones. So what we do is we mark them out. We consider them all weak because they are not structurally relevant as the extreme or decisional would be. These are all weak supply zones. I follow the narrative and I've realized that this could be an area of interest. This could be an area of interest, and that's it. I'm not going to be putting limits. I'm not going to be putting strength in these areas, just zones to monitor and consider when we frame our daily cycle later on. And then all I need to know is we have supply zones to chase, where we have the extreme over here, price could come to, and we have this weak supply price could come to. So when I watch price action now, I see that the low has been made, but we don't know if it's going to continue bearish or start the complex pullback. So what is going to frame that for us? The framework is going to be bullish push out. The reason is bullish push out because our substructure has been broken. We've had an internal bullish BOS. This is not a bullish break of structure exactly. It's still internal structure. We have not made a higher high relative to our main push. We've now started a complex pullback because we made an internal higher high. So that's what people are going to be thinking. Okay, and me too. What else is there to think? But when we add liquidity, daily cycle, and lower time frame, intra-session time frames, that's where we might get a different read. And that's the key of this video. So when we look into this, I want to see what is price action going to reveal to me. So right now, I'm going to jump into the M5 and do a intraday, intra-session read. So from a market structure perspective alone, we know that where is our relevant areas? Well, what led to the break of structure was this zone. So I mark it out. This zone led to our break of structure. Just a zone to consider. And we know that that zone was taken out. And the next relevant area would be here, this area over here. Now, I'm not going to jump in and say this is a premium area or this is a great area. It's just something to note. Why is it something to note? Is because we had these lows printed, an inducement that led to a push out. So we know that this could be potentially a demand area. And that's all I need to have. And then I know that price could be doing a bullish move. Why? Because we've had a bullish break of structure and we could be coming towards these supply areas. Okay, so that's a consideration that price could be doing something like this. Final push, bullish push. We have a complex pullback down like here, complex pullback, all the way down to here. This area was not fruitful. So we came back to the extreme of that push. And then we are looking for a replication like so. And that could be now trending up to our supply area. And then maybe we get a bearish push. That was one way to look at it. But now when we add our Asia range and daily cycle, that's now where we can start to consider things a little bit differently, okay? Other areas price could react from that I want to focus on the left. So we know where our potential demand areas is following market structure and liquidity. So we had this build up over here of liquidity. Price came in, induced that area and pushed out. So I know that this is a very nice area. So I'll consider it, okay? Next, we have, following the inducements once again, we have this build up of trend line, one touch, two touch. So I want to be seeing that trend line that has been formed, one touch, two touch, third touch. Price then even gives a bullish reaction off that third touch. So now buyers are really interested in that zone. And then what do? They even see that we have equal lows, FU candle. So this becomes like a smart money area. That became a smart money trap pegged with a trend line. And then that very clearly tells us that we had smart money trap trend line, strong inducement down, grab the liquidity, and then make the higher high. So then the push really happened from here, where we had all of the liquidity here. Price induces that liquidity and then allows a push higher. So perfect. We know that this is another strong area or decent area. But again, these are all with context. We don't just jump in randomly. We are now just building context. Oh, sorry, wrong color. This is supposed to be a demand. Okay, perfect. And now I've started to frame my day. Now I've started to frame where is my relevant areas, where potentially price could come from. That's all I need to do for now. Okay, so now I've added framework of market structure. The next thing to do is realize what is the intention going on. So we know our relevant supply areas, price could go to it, especially because we've had a bullish switch, or we could have a complex pullback down to one of these areas and then continue higher, or because we don't know if the low of the market has been made, we could just go on and make a new lower low, where this could be considered a run of liquidity inducement, and then we just continue lower, following what? Following this. Lower high, lower low, lower high with an inducement left, and then continue to make a lower low. So that is also a valid play. So we can't give preference to bullish or bearish right now. We don't know what the market is going to tell us from a market structure perspective alone. Okay, so that's why we do a multi-time frame read. We validate our relevant areas, which we've done, and then we add our lower time frame market structure confirmations, and then we add smart money traps, inducements and liquidity cycles, and also the daily cycle on top of the framework of structure to see which one of the multiple scenarios that are valid is going to play. Because we have valid bullish reasons, we have valid bearish reasons, even when we do a multi-time frame analysis. So now we add layers to our analysis. The next layer is going to be smart money. The next layer is going to be liquidity cycles and daily cycles. Once we've added all of this in, that's when we can start to say which one of our multiple market structure scenarios, which one is going to be the most favorable. And that's the key right here. So I'm going to now jump into doing a read from a devil's advocate perspective. So I want to do a perspective read of where retail traders are thinking and where their liquidity is going to be to really identify where liquidity cycle is going to happen. So first of all, we know that we've had a bullish break of structure and we've made a high in the market from an internal structure perspective. So what are these traders thinking? Well, let's mark out their intentions. Number one, we have support and resistance traders. So we know that we've had a double bottom. So that is what traders are going to be considering, especially as we enter London session. These traders are going to be thinking, okay, we've had this double bottom. They're going to be looking for buys. So we know that there's going to be liquidity here. Let's do that in orange. Okay. Now, what else kind of liquidity can we see? We can see this trend line liquidity. Okay, we have this order flow liquidity. That is a zone price could be magnetized towards. Let's do that in red because it's an area that has not been mitigated yet. We have this smart money zone where we had equal lows FU candle. So we know that is a demand area. Perfect. But we also have these lows that were printed from a smart money perspective. Lows printed, FU candle, push out. Okay, so smart money traders are going to be interested in this zone. And more importantly, they're going to be continue to be interested in this area because it's going to be an FU candle zone for them. So we know that there's going to be continued smart money traders, therefore stop losses there. What else can we see? We can see that we have a trend line here. All of that liquidity, like so, has been a trend line liquidity. And what has happened? We had this trend line. We had actually do it as a trend line itself. We had a bearish trend line, like so. And that bearish trend line, let's do that in this pink color. We had a breakout. So price is going to do a break, retest, maybe continuation. From a trend line trader's perspective, they love breakout trades. And we have this FU candle with the breakout. And if we just fib that up, because we know that's a very common confluence, we know that our deeper fibs is going to be aligning with this area. So we know that there's going to be certain volatility in this zone. So we can actually just increase the size of this to cover the 61.8. So we know that fib traders are going to be looking at in this zone. Breakout traders are going to be looking at this zone. Smart money traders are going to be in this zone. Support and resistance traders are going to be in the zone looking at the double bottom. So we know that there's a plethora of liquidity in this area. Now, that is just for us to notice where a trap could be. Okay, so let's leave that on because I want to reveal further as price develops. From a supply zone perspective, there is nothing too significant here because this is just the rules of the efficiency of the pullback. We have all of these supply areas, sure, but we've come to this demand area. So right now, we don't know if these supply zones are valid or not. So we don't take any heed of that just yet. We just watch, okay? And now we know that we have these zones lower that price can come to. So we might see an inducement of this area. We might see an inducement of this area. We might see an inducement of this. We don't know where is enough liquidity. We are just marking it out before our London session, okay? Now I want to come into my M1 as we come into Frankfurt Open and start to be prepared to see what is going to happen. Okay, so let's play a few candles and see how price is going to be reacting. We're coming into Frankfurt Open. This is now seeing we are getting a reaction off this area right here. So what is that telling us? Well, we read the substructure within, we can see that this is an interesting area because we had minor inducement here. This inducement led to a push out. Then we had another minor inducement with all of this small liquidity, minor inducement here, and then minor inducement over here that led to the push out. So price has come back to that minor inducement zone right here and is giving a reaction. So smart money traders are thinking, I need to get in off this reaction because it's coming off a smart money zone, because it's an FU candle with these lows, FU candle. The FU candle has an FU candle inside it. So they're loving this area. And then we pair it with the Fibonacci trader we just showed, with the breakout trader of the trend line, with the support and resistance trader. This is a strong trap. We can see how all of the buyers, market structure, smart money traders, support and resistance trader, trend line breakout traders, Fibonacci trade, all these people are looking to get in on this area. So we know that London Open is where manipulations can happen. Okay, so when we know where manipulations are going to happen, we can see where the traps, where the build-ups are happening, where people are going to go wrong, and see if there are going to be a manipulation, see if there's going to be an inducement to frame our day, to start to establish what daily cycle we are going to have. So that's something I'm considering now, because the market is trying to tell us we are going to be bullish. So I don't want to do what the masses are doing. So I'm just going to follow and wait. I'm waiting for, okay, perfect. So this is now showing me that this trap is really strong, because now even more traders are going to be getting in on this area. Okay, so I can now confirm, for me at least, this is a smart money trap. This is a smart money trap. Just a trap in general, not necessarily smart money, but all of the liquidity we mentioned, from the breakout trader, from the Fibonacci trader, everybody is now getting in. And even this new high, whenever it's formed, okay, we are really getting a bullish push out. So it's really telling everybody, get into this area. So for me, what do I see? I see even more confirmations that this is now going to be a zone to be taken out, because we are now getting another trend line. Okay, and we are getting this bullish trend line. The breakout traders break, retest, continuation. Fibonacci traders, everybody is happy, and they're all waiting for what? They are all waiting for a new high to be made. They are waiting for price to come and make a new high to come to the supply area, because that's what's logical from the market structure perspective we did at the beginning. So when we have established that, now it's actually looking interesting to see, okay, where is the manipulation going to be? So now I look left. Now I look left and say, my London session is imminent. I'm just about to enter my London session, and all of this liquidity waiting. Equal lows liquidity, trend line liquidity, smart money liquidity, this other trend line liquidity, there's Asia low liquidity. There's so much liquidity waiting for me, and London session coming in. I cannot say price is going to go and take that liquidity. That's impossible to say, but I can say that is a hypothesis. That is a reason I could be looking for that. I just need to see if price is going to confirm it for me. So that's what I do. I look on my left and I say, where could price react from? So I read this better. Now I look left and say, okay, where is interesting for me? Well, I do another read, as we always do, where we have trend line build up. We know that price is magnetized towards that trend line. We have this highs build up of highs, and we have this inducement. Perfect. So that inducement is interesting for me. That inducement is a good one, because we are coming off this supply area and mitigating that. So we know that we are following bearish order flow here too. And this area led to the low. This area led to that push. And we know that along the way, we've had this area covered with an inducement over here. So we know that this could be an area to be interested in, just to watch. And then I look over here. This is with my Asia high, so I'm not really going to consider that as a supply zone. But this area could be considered a zone. But we know that that was most likely a smart money trap, because we know that was taken out here. We see that we're having an inducement right now coming into our London session. I don't know if it's going to induce it or respect, but I'm just going to watch. Inducement high. Okay, we know that price could come to this area, so I want to have that marked out, because it could induce up to this point. But we also want to see what has happened in our Asia high, where we had this equal highs. Okay, equal highs, perfect. FU candle right here. FU candle that led to this low. Smart money traders are obviously looking at this area, but it's pegged with Asia high liquidity. And when price came to that area, what did it do? Lovely. It actually told smart money traders, you should be looking to get in, because it did. Made a push up, made a high, made a higher low, made a higher high, made a lower low. So it gave a small break of structure here off that smart money zone with Asia high. And then smart money traders are going to obviously be jumping in this area. We know that stop losses are all in this area from smart money traders. And then price did a run up. It did an inducement high. So what do I know this as? This is now a smart money trap. So now I can add that into my daily cycle read and say, okay, interesting. We've had smart money traders getting in, looking at this zone over here, which is a valid smart money zone, but we are adding our liquidity now. We are seeing that they are trying to build a narrative to say you should be buying. They are telling the sellers you are incorrect, because the smart money traders maybe took a shot here. They had their reasons to get in and they got taken out. So this is reaffirming that the buyers should be in the market. So those smart money traders that were selling, they just took a loss. What's that telling them? That's telling them you were wrong. The market is bullish. So what are they going to be thinking? These smart money zones with the FU candles within, that's the area to be buying. So we are now strengthening this liquidity. So for me, what am I thinking? Dumb money is now really laddering into this area. So I know that this is a stronger area price is going to be magnetized towards. Therefore, for me to be looking to sell makes a more enticing offer. It becomes more confirmed to look for a sell, but I don't just take a sell yet. I need my full confirmation with daily cycle, lower time frame confirmations, and so forth. So let's see if we get that. But right now I'm just building my narrative and saying if we get it, this area could be an inducement zone. So I want to see if it's respected or not. But all I need to see is what price action is going to do in my London session, because we've just had inducement of Asia high, inducement of this smart money zone, and potentially price reaching this area, but no reason to actually reach that area. It could not, because we've taken liquidity here. And right now, liquidity runs is going to be fueling the move lower. And we just need to see, was this liquidity run enough, or does price need to come higher? To determine that, we read price action on the lower time frame. And we read it from the correct way, which is this was a smart money trap, but also a minor inducement right here to fuel the move higher. So we had a minor inducement here to fuel this push out. And that's all I really need to be seeing. Now I look at my lower time frame to say, is that going to be confirmed? And are we going to see a bearish reaction from the supply zone, or maybe right as London opens? So let's play a few candles. Okay, so we get an inducement of this area and price is just shooting up. That's why we use our lower time frame confirmations. We don't want to just randomly jump in. So we're getting an inducement of that zone, and we are now getting an inducement of this zone. So this area became another smart money trap. Perfect. We didn't just jump in. We saw the zone, we saw what they were reading, and we saw that they got taken out. That's why we always use our lower time frame confirmations. Now we have quite a few inducements. Now I want to see, are we going to induce this area or not? So that is just an area to consider, but we know that this is a supply zone. So we could be inducement of smart money trap Asia high, inducement of this smart money trap over here, inducement of this smart money trap. And I'm seeing now price is coming into a supply zone and London open. So I want to see, is price going to now start to react from here? We don't jump in, we read and react. Price is coming higher. Okay, now we're getting some leveling off, but we don't jump in. But now I can see that price is reacting off this supply zone. It's come almost to the extreme of that supply zone, and I just need to get confirmations, and I have my lower time frame confirmations already created. They are models. I don't have to now jump in and imagine things and use indicators and use Fibonacci's and whatever. No. My lower time frame confirmations, they are exclusively set. I know exactly which ones I need to trade, and I know the criteria of all of them. So I just need to wait to see if any of them are going to present. If none of my models present, it's just not my day. It's not my trade, and that's absolutely okay. But that's the level of precision we need. From this setup, you can see it's a key setup where we have so many confirmations now, from smart money traps to liquidity traps to trendline traded trap, Fibonacci trap, structure traded traps. We add in our daily cycle. We're starting to see that play out. We are seeing our lower time frame confirmations. We are seeing liquidity cycles now happening. Everything is there. But without the models of exact entry, we can have everything else perfect, but without that missing piece of the puzzle, it is still not an entry. So that's the last piece of the puzzle I'm looking for. It's confirmed with time. If I get that as one of my models, I'm jumping in. If I don't get that, I need to be a strong-minded trader and say, this did not fit my plan, therefore I do not execute, because I am a professional trader. I don't trade with my emotions. I don't trade as a gambler. I don't trade with hope. I trade with my plan. That is predetermined, tested. I know my data. I know my metrics. And I know that deviating away from my plan is going to deviate away from my track record and strategy. And that is maybe in the long term going to lead to more losses. Therefore, I do not take irrational action that is away from my plan. So I'm going to execute as I'm supposed to, and that's exactly what I need to know before I come into this. Right now, I cannot take this sell. There's nothing for me to take. There's no break of structure. There's no smart money zone. There's no lower time frame confirmation at all. For all I know, this could just now go and make a high relative here. It could just come higher, induce this area. So the traders that take these kind of trades and maybe show you on Instagram that, oh, I took a trade without a confirmation, on the day that they are showing the screenshot, yes, they took a win without confirmation. But there's going to be 10 days before that where they took losses because they were jumping in without confirmations. They just don't post it on Instagram. So you have to be careful of jumping in without confirmations and being tricked by people that are posting that and showing you that they are profitable when they're really not. I mean, don't take my word for it, test it out yourself. Okay, now we're getting something. We're getting a lower time frame confirmation type that we have, because we are establishing now this area that could have gone on to make an internal high, failed to make a high, and went on to make a lower low. So now we've had a bearish confirmation or bearish switch. We've had 2 legs. And now we know that this area could be of interest as a supply zone, as long as a bullish target is not met, and that bullish target is here. So as long as we didn't come to a bullish target, this could be an area we could look to sell from. So that's exactly what I'm going to look at. I'm looking at this area over here as a supply zone. Let's do a bearish outline. And my entry is going to be on M1 over here. And I'm going to cover this zone. Perfect. Because I've had the low, and as long as price doesn't invalidate, that is a nice sell to be taking. Now, where are my targets? Well, using the tool that we have, I just want to look at my average daily ranges or average session ranges for the last few days. So this was 32 pips, 22 pips. This day was 37 pips. This day was 24 pips of London session. So I'm just looking at my average London session. This was a small London session, just 10 pips. But I know from general trading that I've been doing for a while, I know that London session is usually between 25 and 30 pips on average. So that's giving me a range for my London push in my London window. So I know that I want to be taking my partials accordingly. So what is that 25 pips going to be looking at? So I want to be measuring that. From my entry, 25 pips, 20 to 25 pips aligns with this zone. So I'm actually not going to say this area is going to be liquidated. I know it's an area I could consider because there's so many stop losses in that area that I would love to see an inducement. And I know that if I'm aligning a sell, I know that I can sell into that inducement. So that's pretty cool. But I don't know if it's going to induce or respect. I cannot say that. I'm going to react to it, but I'm not going to forecast it like that. So I know that my average range is about 25 to 30 pips. And that 25 pips, as you can see, aligns with this smart money zone. So that is a nice area to be taking a partial. So that's a zone we can consider. But I know that I use my partial protocol system, and I know that I like to take a partial around a 1 to 3 as well. So I'm just going to be considering that. And I know overall, where is my targets that they could be? I want to be targeting around here. In this area could be nice. In this area, I want to be taking a partial. And then I want to be looking to make a low low. So that's another area I'll be taking a partial. So that's how I frame my pre-market or pre-entry analysis. And then I come back into my M1 and see how price action is going to react. But this is my hypothesis for now. I have my entry. My stop loss is going to be covering that area right there. I want to give myself a little bit of breathing room and a little bit of space above for spread reasons. And that's actually how I'm going to execute this trade. I have my confirmations and I know that price can come to here at a minimum before reversing. So that would be where I would look to take a partial. Yeah, it's around my 1 to 3 risk reward, that inducement area. So that's where my first partial is going to be. And break even is obviously with our break even protocols. So let's see if we do get an entry, as long as it doesn't invalidate with the invalidation criteria I met or set out. Okay, look, now we are doing a complex pullback. You can see where we have this main push down with the bearish BOS. Then we have internal high, internal higher low, internal high, higher low, internal high, higher low. Price is just trending back, hopefully to my supply area to trigger an entry for me. Perfect. Okay, I'm triggered now into this trade, tapped in, stop loss over here, and I'm going to be waiting for a reaction or break even. We know that this complex pullback now is potentially all liquidity. So that's something I want to be seeing. And I'm seeing that is being attacked. Perfect. Now I can break even. And now I take a partial right here. Now I just want to see, is this area going to react? And if it's going to be a bullish reaction, I've taken a partial at 1 to 3. I've taken 50% of my volume. So I'm good to go now. And I just want to see if there's going to be a further bullish push. I'm break even. I've taken a partial. I'm risk-free now. I'm carefree. I just want to see if there's going to be entries to potentially get into buys. Is the entries to further add into my sells. I'm just monitoring price action, but I'm not trigger happy. I'm not jumping in. I'm just reading. No reaction, nothing there. So we know that this was a smart money trap. Perfect. So it's reconfirming to me that sellers are still in control because they're trapping out the buyers. Perfect. And I'm reading the inducements still, and we're seeing that this is inducing high, confirming to me that sellers are still in control. Inducement high and then bearish mitigation. Sellers are still in control and they are taking out the buyers. So perfect. I'm good to go and continue in my sell. Now I'm coming to this key area that we've been talking about all day. And this area for me is a now key area to see smart money traders, trendline traders, all of these traders that we mentioned, support and resistance traders, everyone to get blown out. Why? Because the real inducement of the day was this. We took out Asia high smart money trap. We took out this smart money trap. We took out this smart money trap. We entered a supply zone. We got lower time frame confirmation in the London window, daily cycle variation confirmed with lower time frame inducements confirming sellers are still in control. This is really showing me strong signs that buyers are going to be loading up over here and they're all going to get taken out. So I'm happy to hold my sell. I'm happy to continue holding my sell to target all of this liquidity because I can see that this is most likely, most probable scenario is that's going to be taken out. I cannot say with certainty, and I don't want to jump into a buy without confirmation. And maybe it's going to be a buy, but I'm not going to be sworn to any bias. I'm just going to read it. But I have a feeling based on my analysis that this is going to be taken out that zone, which is why I'm happy to hold on to my sell. Price is giving a reaction, telling all of these traders get in. All of these smart money traders are getting the confirmations that you should really be jumping in and really confirming. And there we go. We had a small build up over here, small trendline liquidity, inducement lower, still valid in this area, but I want to see a strong inducement. Still getting these buyers in. And there we go. There it is. There is that inducement. All of these traders taken out. All of these traders taken out. Everything we discussed has now been taken out and my sells are going to continue. So now I'm pretty good. And now I'm pretty happy. I take a partial around here and I want to see this area get attacked. And now I'm just waiting for this next zone that I'm going to be waiting for in my New York session. So I can let just price do its thing. And there we go. It actually very quickly folds to that next area. So this area, as I'm coming into my New York open, would be an area I can look to potentially see a reversal. But I'm reading price action, is giving me nothing, no break of structure. It's just continuing lower. And I read my inducements. And I can see the same thing again. We have liquidity being engineered, inducement into supply. Same here, liquidity being engineered, inducement into supply. So this is just confirming to me liquidity being engineered, inducement to supply. This is just showing me liquidity, inducement into supply. This is just showing me the sellers are still in control. Therefore, all of this is smart money traps and just traps in general. Small reaction is a trap. So I know my New York window right now is still bearish. I have no reason to be getting into a buy. So I'm just going to be watching this continue to go lower. Most likely it's going to react off something here, maybe this candle, but I'm not going to get in. But that's an area I can be seeing that this is a potential zone of reversal. Yep, that made sense. We mitigated that inducement area to continue lower in our New York window. Perfect stuff. And I'm just going to continue my first entry. I don't really want to be jumping in. No bullish signs, nothing. So I know that that was a nice area to be, taking a partial. We're done for that zone. And now I'm just waiting for this last zone. But now we have come to the end of our New York window. So I'm basically going to be wrapping it up for the day. I've taken a few partials. I've been monitoring this trade and I'm just going to wait for the next day. I'll leave a runner, but pretty good in terms of it's a 1 to 25-ish. With partials obviously taken along the way, but that is that trade setup. So when we come back the next day, then we need to see, are we going to be continuing the sells or is there going to be opportunities to buy and hedge this sell position? But right now we're going to have a very small volume left and I'll show you exactly how I took partials on the TradeZeller. But over here we can see we have our TradeZeller performance of this exact trade. We can see that this trade netted just under $10,000. I took 30 lot trade. Okay, my return per pip was here. My commission was about this on closed position so far. I still have a runner. Gross P&L minus commissions therefore became my total profit with the gross profit over here. My stop loss original, as I mentioned, was at this high. You can see exactly the price I entered at where my stop loss was. And therefore my risk reward or realized risk reward was about a 1 to 10. But what happened was I took a partial at the 1 to 3 zone that you'll see. I took a partial over here and I took a partial over here. So that is that trade. You can see I've logged it in the journal. So you can see exactly the trade setup and idea that will be covered. And you can also see exactly where my entries were. So you can see I took a 30 lot trade and I entered. You can see the price I entered at was the one I'm going to cover. I took a partial at this 1 to 3 zone. And then my next part, which was 50% of my volume. And then I took 5 lots, and I have 5 lots remaining. So 30 lots total trade. Partial 50%, and then I'm partialing 16.6, 16.6, and 16.6. The remaining 50% I've divided into 3 partials at my relevant areas, and I'm leaving a 5 lots as a runner to see where that final position could go. And that's exactly that trade setup. So you can see everything is marked out, everything is executed and logged, and you can even do a trade replay, which I really love that feature on TradeZeller because you can go back and just review your trades again and again. And everything is logged and done. And you can see exactly where we entered. Let's actually go to just London Open at here. So when I go and replay my trade, I can actually see price is doing that 2-leg protocol that we mentioned with our lower time frame confirmation type. When it makes that internal BOS, you can see that price has made that internal low now. I'm just going to flick through price. You can see that price did that lower low that we mentioned. Jumped too far. But you can see it did that lower low. I executed on that 2-leg protocol. I took my partials at that next area that we mentioned. And then as we play out the whole day, you can see that all of my partials are taken, as I've mentioned, the New York window partial, and then closing out the day over here. So that is how that trade was done. And then when we go back to our metrics or the journal itself, you can see that trade exactly. I've logged it on my chart. So whenever I come back to my journal, I can see exactly where I entered. I can see exactly how I performed. I can see exactly my execution from my broker, exactly where I traded it. And I can also see my journal entry. So this is, if you're journaling all your trades, it syncs up to your broker. It's a brilliant tool that you can track different strategies, track different accounts, track everything, track your performance. And it gives you reports and everything. This app is wonderful. Definitely use it. You can get insights. You can get reports. You can get strategy builders. There's so many cool things in this that, yeah, definitely give it a check it out. But this is just to show that I took this trade. I'll also throw my MT4 screenshot somewhere in this video so you can see that I executed this trade and then I have the full analysis. So to kind of wrap up this trade, we can see that this trade overall was a 1 to 25, but I did not capitalize a 1 to 25. The ROI of this trade was different to the risk reward of the setup. The setup was a 1 to 25 risk reward, but my performance overall netted a 1 to 10 realized ROI where I risked about $1,000 and I made about $9,900. So about a 1 to 10 once you factor in commissions and things. But again, a very good setup, but you can see that using market structure alone would have led to losses. Using smart money alone would have been leading to losses. Using any strategy alone would have led to losses. But it's how you combine things correctly with trade models and everything we discussed that led to the key of this video. So ladies and gentlemen, I do hope you enjoyed this video. Before we wrap up for today, I want you to actually check out a couple of things, because this was a cool video. But if you check out the previous case study that I did and trade breakdown, where it was a similar fashion to this, in that one, I went really into detail on certain other factors where it came to how I took partials and different trade models. And it's going to help you see how we follow through from the previous day to now this day. So do go ahead and check that out. So ladies and gentlemen, thank you for joining me in this video. If you made it to the end, you're a legend, and I'll catch you in the next one.